Good morning, everyone, and welcome to the European crossover webinar. And we did go on and see a pretty good sell-off in equities yesterday that did generate some moves across FX. We kind of broke out of some levels, at least at the time we did yesterday. We can go on and take a look at some of those markets. So we did go on and see the NASDAQ pull back and pull back actually quite a bit. I was sharing quite a few charts actually as we went through the day because I thought, I saw breakdowns in many of these markets um, at the time. And these appeared to be suspect at the time, and I thought that we could go in and break lower. And obviously, we did go in and break lower, but the setups we were seeing, it looked like it was certainly what I was saying, susceptible to a breakdown. And breakdown we did get. You can see Tesla made it all the way up here to 1783, and at this point now we're $400 lower here in Tesla. I mean, that's in one day. You know what I mean? So and huge was Facebook. Microsoft. But Microsoft's been trading that 214 area for quite some time. You can see here we broke lower and probably going to go down to around 195. It's going to, I believe, I've got around here. So we're open to a subsequent fall. And one of the things my concern was we were going to have traders that were trapped in positions that were way up here in the sky, up in the clouds, and that would secure or see further follow through. And that's what was my thought here. Speaking of which, you can see here with the NASDAQ, we certainly saw that fall, and we saw that fall continue. I actually got long a couple of spots in here as it broke, and I was fortunate to get out, with some gains. But although I thought we were going to break, eventually break lower, I was even surprised to the extent that I thought we'd maybe get a bounce back as the market was still semi-bullish, a little bit of a bounce back, and then sell into that. And the bounce backs were just not to be, found. You can see even now. I mean, this is not a bad bounce back that we've had, but it's just, the opportunities for, which was my take, opportunities for the market to sell, because they're not going to when the market has people trapped, they're not going to let anybody out of jail, especially when the market's falling. It's just not going to happen, and we're just not even seeing much of a bounce back. We did see a pullback here into the slower exponential moving average here, but you can see here we've since rolled back. So on the 30-minute on the S&Ps, we actually made it appear to, above 3220. My focus was on the NASDAQ, but apparently we made it all the way up to 3226, which is pretty huge. And you can see here, we look how far we've come off. A good 70 handles from that area here. And certainly we saw that yesterday with the FX pairs. The euro was really up here very strong. And my take is we started to slide. I did go in and caution and say, hey, watch for the Canadian dollar and the Mexican dollar, because I thought that those are going to be affected when we saw this slide in the equities. And certainly we did see decent moves in those pairs. Actually, we were seeing that further extended this morning. So we're going to take a look at where we stand as far as economic data. We did get a Spanish CPI that came in line. You can see that right here, and then we have at the top of this next hour we do have German zoo numbers for the sentiment. They're looking for 60. Economic sentiment and current conditions are looking for that's crazy, at minus 65. It's huge. And at the top of the hour, we'll have Eurozone industrial production. As we roll into the States, we will get core CPI at 8:30 Eastern. And that'll be it, except for a real lesser known Cleveland Fed CPI. But it'll be core CPI. And no Canadian data today. Let's go and take a look where we are with the gold market. We did see this market pull back a little bit with the equity sell-off, but not as much as you would have thought. I mean, in the past, we've seen that impacted quite a bit when we see equity sell-off, but not so much this time. I mean, we did see it pare back, but not as much as you would have thought. So Australian, New Zealand dollars find support. Australian dollar bond sale draws big bids. The Australian and New Zealand dollars steadied on Tuesday as strong demand for a local bond issue and upbeat trade data from China helped offset caution over the spread of coronavirus. The Australian government sold 17 billion Aussie dollars, which translates to 11.8 US dollars, US billion dollars, and a new 2025 bond line, the second largest sale on record, while drawing bids worth a huge 50.6 billion Aussie dollars. The offer priced at a little above fair value in an effort to sell as much possible ahead of the government's budget update due next week, when analysts suspect it will forecast wider deficits and increased stimulus spending. 3-year bond futures were all but steady at 99.69, implying a yield of 31 basis points. The Aussie dollar was little moved at 69.40, having failed to clear resistance at 70 in recent days. The Kiwi was a fraction softer at 65.32, after also stalling in the face of resistance at 65.93 as coronavirus concerns globally tempered risk appetite. Sentiment was underpinned by figures showing both Chinese exports and imports top forecasts in June, while the Asian giant continued to buy significant amounts of commodities, including iron ore. Domestic data were promising, with a survey of Australian businesses showing a marked pickup in both activity and sentiment in June. Figures from New Zealand have also shown a rapid recovery in the housing market, with home sales almost back to where they were in March, before nationwide lockdown and prices bouncing 9/10 in June. Large swaths of the economy have resumed businesses as usual, while it seems to have been mirrored by the housing market, said Jeremy Couchman. We're not yet concerned the jump in the activities will be sustained. The labor market continues to deteriorate, and the end of the temporary wage subsidy from next month is likely to expose some wounds. So the dollar slightly higher as geopolitics and virus unsettle the mood. The dollar was marginally higher in narrow ranges against most currencies on Tuesday as renewed concerns about diplomatic tensions between the United States and China and rising coronavirus cases put a dent in risk appetite. The euro held on to gains against the greenback and the pound as investors await data on German investor sentiment to help gauge the pace of Europe's recovery from the health crisis. Currency trading has thinned out as a resurgence of novel coronavirus infections has caused some areas to place new restrictions on business activity. Markets now face additional threat for tit-for-tat retaliation between Washington and Beijing over access to U.S. financial markets, civil liberties in Hong Kong, and territorial claims in the South China Sea. The focus has shifted to whether or not the next round of coronavirus lockdowns will be large enough to damage economic growth, said Junichi Ishikawa. The Hong Kong problem could potentially lead to a new trade friction. Negative developments on either side or front could cause stocks to adjust lower. The euro was quoted at 13.46, resting about below 1 month high reached on Monday. The U.S. and China are waging diplomatic battles in several fronts that have the potential to unsettle financial markets. President Trump's administration plans to scrap a 2013 agreement between U.S. and Chinese auditing authorities. This could foreshadow a broader crackdown on Chinese firms listed on U.S. stock markets and are listed under fire for sidestepping U.S. disclosure rules. In addition, the U.S. has hardened its stance against China claims in the South China Sea and has taken steps to end Hong Kong's special legal status. The data due later this week on China's gross domestic product, retail sales, and industrial output, which are expected to show the world's second largest economy staged a V-shaped recovery in the second quarter. Demand for riskier assets is likely to take a hit after California, the most populous U.S. state, placed in new restrictions on businesses as coronavirus cases and hospitalizations soared. And lastly, we'll just take a look at the morning bid. Ghost came back to haunt the markets as a surge in U.S. virus numbers cast a This doesn't have anything to do with it, folks, okay? This is all a bunch of BS, okay? These cases have been growing for literally weeks. So this has nothing. This is just writing, the markets are down because of this. The markets are down because of that. We already showed you why the markets were down, because they got so overextended. And once we started to break lower, and don't forget, we'd also gapped on these markets across the board. These markets at the time had gaps, and we were so extended that now once we got a downside, bit of momentum, all these folks that were buying all these stocks then found themselves in a lot of trouble, and that's what brought the market down. Not a rise in coronavirus cases. The rise in coronavirus cases have been going on for weeks. So what happened then? So it's all a bunch of BS. That global stocks retreated on Tuesday, following a reversal on Wall Street on Monday that saw the S&P slumping 1% after the briefly scaling post-pandemic highs and turning positive on the year. Safe havens were back in demand, and the dollar gained. U.S. Treasury and German bond yields slipping. Oil prices fell. The risk-off move came after California joined Arizona and Texas in reintroducing lockdown measures. This has nothing to do with it either. That's just a reason, okay? The markets were already sliding. I could, if you're in the chat room, I've been saying since mid-U.S. morning, it looks suspect. It looks like because they were ceasing to rally any further, and we were starting to break a little bit lower, and by around noontime, we'd already started to really set ourselves up that we could really see a further follow-through in the afternoon. And a couple of people, I'll say specifically one person in the chat room was giving me a hard time, that I was, making a big deal about it, that we're still going to keep on going. Well, we know how that played out. Okay, anyway, data from Singapore saw the trade-reliant economy plunge into recession in the second quarter with a record 41.2% dive, signaling the challenge outlook ahead beyond its borders. And numbers for the UK showed the economy rose 1.8% in May and had shrunk by 24% on year-on-year. Much worse than expected. Even better than expected trade data from China showing the recovery is on track thanks to a massive stimulus program, could not assuage frayed nerves. The rest of the day will bring some more data to the markets and chew on Germany's ZOO index, and is expected to remain stuck in negative territory in July, while Eurozone industrial production for May is expected to have contracted again. The United States will release inflation data later in the day, and the Federal Reserve's James Bullard will discuss the economy and monetary policy to round the day off. Back to today's frontline. European markets fell on opening, with London's FTSE down 0.9, Germany's DAX slipping 1.2%, and Paris CAC tumbling 1.4%. Tumble as investors look with equal trepidation to Europe's earnings season. With that, we'll go and move into the analysis. So the euro closed above 13.37 with its best close in nearly 4 weeks. The pair was not able to stay above bias chart resistance at 13.73. Remember, we had that as our bias chart resistance, which will remain. Support will be 12.63. So we're kind of a bit in no man's land. We did fade. As U.S. equities, we were still up here near the highs. We did fade as equities came under pressure, but my concern was that it was still going to look. Someone asked me, or someone was talking about it later in the day, and they were saying, I think they were saying they were short. Oh, yeah, they were short the euro, and what do you think? Well, they were asking the general chat room. My take was just look at the daily close. Because, we're closing up in here. You can see right now, we can see we barely even moved so far. And if you're bearish, that's really not a good thing considering how well we've done. Now, obviously, our big resistance is 13.73, and we can take off like a scalded dog if we get above 13.73 on a daily close. But still, it was going to be a pretty decent close, and a pretty decent close it was, above 13.37. And you can see right now, they're not giving much at all. So 1373 is going to remain the bias chart resistance, and support, we have moved that to 1263. Moving on to the cable. Cable challenged the upper levels of the last two prior sessions. You can see here's the last two prior sessions there. And we did challenge those upper levels without success. Closing sub 2602. You can see that. Resistance will remain 2683. We're supported 2486. So support's going to be 2486. Now resistance, we're already at 2513. I don't think we have to keep it all the way up here now. We'll go with this low here, which is just above 2602. and that would be 26.17, and that might even be a bit of a stretch, but we'll go with 26.17. Moving on to the Aussie dollar. So the Aussie pared back slightly despite the sell-off in equities. Resistance remains 70.02 with support at 68.62. So I believe there's no changes on that. See, 70.02, 68.62, no changes. You can see, despite the sell-off in equities, Aussie dollar is really holding up like a champ. And I was thinking about this yesterday, and to me, I think it probably has, to a certain extent, a little bit also is gold's doing so well, and they do manufacture gold there. So, I mean, there's a lot of other reasons it's doing well, but I mean, you would think it would pull back some, and it's just not really pulling back. So, that's one thought there, but no changes here. Let's go move on to the Kiwi. Oh, and I think there's no changes here in the Kiwi either. There was no change in the Kiwi. That's right. We'll take a look here. We have fallen back just a hair bit more. We had support at 64.93. We're going to keep that 64.93. And on the upside, we had 65.94. I think we can pull that down here, and we're going to go with this close right there for resistance, which is going to move it down to 65.75. Moving on to the dollar CAD. The dollar CAD saw a minor rebound as U.S. equities came under pressure late on Monday. Resistance will be 36.49 with support at 35.42. Well, so far the high's been 36.46. Okay, not bad. So it's 36.49. We'll keep it at the same. See that? And the low, 35.42. We'll stay with that. Just a little bit higher. Moving into the dollar peso. The dollar peso saw a minor upswing on Monday with the equity slide. Resistance will be 23.05 with support at 22.49. Now I did have this area here, 22.85, and my thought was, and I was going to almost keep it, but I thought, it's so close, and it is, keeping the market in check here. But my thought was, is that if we see a further deterioration, and maybe not necessarily just today, but looking further out, then I think the next challenge is going to be really 23.05. So my thoughts were, if I'd have put 22.85, we could have already been at 22.85, and so I'm going to looking further out. We'll be looking at 23.05 for the dollar peso. It's a little bit high, but I think we could potentially get there. And support is going to be 22.49. And let's go move into the dollar yen. So the dollar yen moved higher into Monday's close. Resistance will be 758 because we did see. I mean, this was a pretty good move, I have to say. I mean, it's actually a bullish engulfing line, but considering the moves that we saw, although it's kind of, generally the dollar yen will move with risk on in the sense that if it's gaining, we'll see a better move, but it's kind of running opposite to that. That being said, considering the move we saw, I would have expected an even bigger move, and we're not really seeing it here, although from a technical standpoint, it still was a bullish engulfing line. But once again, not as big as I would have thought. Although I guess you can think is that the euro didn't come up very much either. So anyway, that being said, resistance is going to be 758 with support at 692. And the cash dollar index. So the dollar index was kept in check on Monday with a slight uptick off the lows. Resistance will be 96.79, with support remaining at 96.09. So relatively tight session so far. And 96.09 remain the same. Moving into the cross rates. We did see the market pull back a little bit further, but not really a whole lot. We're still, go here. Might help if we change it to a daily. But it hasn't really come under a lot of pressure. We had 69.30. I'm going to stay with this 69.30. We haven't really come up that much. The only difference is here's the 70.70 we've had. The only thing we're going to do is we're going to move. You see right there the close here and the open there, basically the close there. It's now going to be 70.37 for resistance. 70.37. And moving into the euro yen. So we saw a pretty good strong close here yesterday. We actually looked at, we took out all these prior sessions as far as the close. And we'd even moved our bias chart resistance from this 2151, had moved it and dropped it lower in reflection to what had happened. But look, we had a very nice smart close here yesterday, which best close that we've seen, so we should expect some further follow through. And resistance, we won't go overboard, but resistance is going to be right there. It's really where they went to, so let's move this all the way. We're not seeing a lot of follow through today. We would have expected a little bit further, and we're not seeing it right now. I'm hesitant to push it all the way out to here. There we go. It would be 2220. So it's going to be 2220 on the upside. And we'll keep the bias chart support is going to be 2112. 2112. Let's go move into the euro odd. A little bit higher. We're starting to move here in the euro odd. Looks like we may have taken out some support resistance, which we did. We had 6302 for bias chart resistance. We closed the day at 6342. I mean, we're starting to see a little bit of movement here. We won't go, well, still we've moved it up here, 63.79, so not bad here. We're going to go with these highs right there, which is going to be 64.22. 64.22. And bias chart support is just going to be yesterday's open, 62.49. Moving into the Euro Kiwi. So we did get past 72.53 resistance at this point. If we are now starting to see some follow through, it's actually going to come in at 74.99. I guess we can call it 75 even now. And we'll go with the high here, the support, 72.83. Still trading relatively quiet here in the Aussie yen. No changes here. No changes here in the Aussie yen. It's a bit surprising, considering what the equities have done. Let's go and move in now to the guppy. We had 34.32, and that's where we're at now. Now that's from yesterday. We're actually going to move this a little bit lower for them to test. Not much, but right there, 33.86. And resistance is going to be right there, which is going to be 34.91. 34.91. And lastly, let's go with the sterling nod. We had 80.48 for yesterday, and the low was 80.43, so pretty close. We know the sterling's a little bit under pressure, so we're going to go with 80.12. And resistance right there at 81.06. There we go. And that's going to be it for FX. Relatively quiet session. We may not see any real big movements until we get into the U.S. session, especially with the big movements we saw in equities, although we are kind of bouncing around here in equities a little bit, still relatively tight ranges. So probably nothing until we get into CPI, and that'll be it. And we'll see you in the chat room. Thanks for joining us here on the European Crossover.